Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, I'm Sandy, your guest host from Keller Williams Legacies here, to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're starting with a topic that's raising eyebrows across the country. Canada's mortgage arrears are now growing faster than during the 90s. Sandy, have you seen the latest data from the Canadian Bankers Association?
I have, Steve. It's quite concerning. The arrears rate for mortgages rose again in August, reaching 0.24%, which is the highest since September 2020. But what's more alarming is the speed at which it's climbing, 71% in under 3 years since mid-2022.
Absolutely, Sandy. The velocity of this increase is what really stands out. Historically, a high but stable arrears rate means the problem is understood and contained. But a rapidly rising rate suggests we might not fully grasp the extent of the issue yet. It's reminiscent of the late 1980s when a similar pattern led to a long and painful climb in arrears.
Right, and back then, the arrears rate climbed to 0.65% over 91 months. Now, we're seeing a 20.3% compound annual growth rate, which is even faster than the 90s. If this trend continues, we could hit rates similar to those seen in 1996.
And while that sounds alarming, it's important to consider the context. During the global financial crisis, for instance, Canadian real estate wasn't hit as hard as other markets because it hadn't been as overextended. But this time, the rapid increase is concerning, especially with economists warning that this correction might persist for years.
That's true, Steve. And while foreclosures might not spike in the same way due to Ontario's simplified power of sale process, the impact on households could still be significant. It's not just about the numbers. It's about the families affected by these changes in the housing market.
Exactly, Sandy. And while lenders might not be overly worried due to these mechanisms, it's little comfort for the households facing potential financial strain. It's crucial to keep monitoring these trends and understand the broader implications for the Canadian housing market. Our next topic is the Bank of Canada's decision to hold off on further rate cuts despite the ongoing economic uncertainty. Sandy, this is an interesting move considering the pressure for more aggressive cuts due to the slowing economy and unclear forecasts. What are your thoughts on this?
It's certainly a cautious approach, Steve. The Bank of Canada had provided some rate relief earlier this year, but now they're holding steady at a policy rate floor of 2.25%. The central bank seems to be prioritizing flexibility over aggressive action, especially given the unpredictable nature of inflation and growth right now.
Exactly, Sandy. And it's not just Canada that's holding steady. The Federal Reserve in the United States is also maintaining its rates amidst the complexities of a potential government shutdown. This decision by the Bank of Canada has already impacted Canadian bond yields, which have risen as markets adjust their expectations for future moves.
That's right. And with the Bank of Canada signaling that further rate cuts aren't likely unless the economy takes a serious downturn, it's a waiting game. The prediction is that Canada's growth will remain subdued at least until 2026, which might keep rate-sensitive sectors like housing under pressure due to higher borrowing costs.
True, and this patience in policy could keep market volatility alive. Investors might need to brace themselves for a longer pause and adjust to an environment with fewer surprises in terms of rate changes. It's a challenging time for sectors that are sensitive to interest rates.
Definitely. And it's important to note that Canada's economic outlook is heavily influenced by global trends. Factors like rising tariffs in the United States and weak demand from Europe and Asia are affecting import prices. Domestically, wage growth is sluggish, and while inflation is a concern, many of its drivers are external.
So, without a quick turnaround for rate cuts, Canadians might have to prepare for a prolonged period of modest growth as these global headwinds persist. It's a complex situation, and it'll be interesting to see how the Bank of Canada navigates these challenges moving forward.
The sale of the Libfeld property empire is finally moving forward after an Ontario Superior Court order from 2021. This marks the culmination of a prolonged and contentious legal battle among the four Libfeld brothers who inherited the massive real estate portfolio from their father.
That's right, Sandy. This is one of the largest property portfolios to be sold in Ontario in recent years, featuring 61 individual sites, 884 acres of development land, and 1.4 million square feet of commercial space. What's notable is the potential for high-density housing development, with planning for up to 16,000 units.
Absolutely, Steve. This sale is quite unique because it isn't the result of an economic failure like bankruptcy. Instead, it's the outcome of familial disputes and disagreements over financial and estate planning.
And the market context adds another layer of complexity. According to Ray Wong from Altus Group, it's unusual to see such a large portfolio come up for sale all at once. The market will ultimately determine the valuation, especially in an environment where commercial real estate activity has been sluggish.
That's a critical point, Steve. The valuation of these assets could vary widely. Some properties might be more challenging to sell, while others could attract significant interest. The brothers themselves, through the Alistair Group of companies, intend to participate as bidders, which could influence the process.
Indeed, Sandy, the market dynamics are shifting. For example, spending on commercial retail sites is up 22% in 2025, but investment in residential development land has dropped significantly. This fluctuating market could impact potential buyers' strategies.
And let's not forget the historical and emotional aspect. Theodor Libfeld, a survivor of Auschwitz, built this empire after immigrating to Canada. His legacy is now at the center of this significant real estate transaction, which adds a layer of personal history to the business dealings.
It's a poignant reminder, Sandy, of the human stories behind these massive transactions. The legal hurdles have been numerous, with fresh court challenges even as recently as this October. But now, with Ernst & Young Inc. managing the sales process, the focus is on resolving the remaining issues and moving forward.
Yes, and with new government policies potentially altering the housing market, bidders will need to consider these factors. The trade war jitters and economic uncertainties could also play a role in how these assets are valued.
The sale of the Libfeld portfolio is a complex, multifaceted situation, Sandy. It's a case study in how legal, familial, and market forces intersect in the real estate world. It'll be fascinating to see how this unfolds.
No doubt about it, Steve. The resolution of this sale will have implications not just for the Libfeld brothers, but for the Ontario real estate market as a whole. Let's keep an eye on how these properties transition in the coming months.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.